Today in the livestock market, the cattle was higher. That uptick in seasonal demand is expected, and that really pushes the market even higher again. It's so interesting that this rally just continues to move higher. There's not much cash trade today, and we've seen that almost every Monday for the past number of months, actually. But the warm-up is coming, and strong demand as well should be pushing the market up, and there's potential for like long-term demand. That really is helping the markets a lot. It's also bringing feeders. Feeders were up too. Optimism driving these futures higher just by what I said. All things are positive. I think like a lot of the technical numbers also are offering some support to these markets because the trend is really to the upside. Wholesale prices are steady to firm, nothing really great, but I think that the idea that there's going to be some real strong demand as the grilling season comes upon us, and with the warm up, it's given everybody an opportunity that maybe this is the time that the markets are really going to start to pick up. Not that they've been strong all winter long, so who knows how high this can go. These numbers are pretty interesting at this point. 120 becomes the benchmark here as the market continues to start to move higher. Now with hogs, they were a little bit easier today. There was some weaker cash trade, but the futures retreated almost 9% from the top. There's a couple of reasons. It did get overbought a little bit. I mean, the frenzy in the rally was so emotional that you thought that it might come in and check in and maybe a little bit of a correction. But correction it did, and we've seen these big wide swaths of moves in the hog market, and so it absolutely gave us that. But the closing of the border threat from the White House is really having an impact on this market. Interestingly enough, as the African swine fever is still a huge issue in China, so we have to be very careful of how far back this market will come. 86, I believe, in the June contract is about the midpoint from when the rally started. Back in a couple of weeks ago, from 76 to let's say 98. But today, with the market coming back and kind of like it really dipped down a little bit, it could definitely have made like a low today. So we'll see what happens tomorrow. If the market starts to rebound a little bit, maybe we see the low and the correction is kind of over, and now we're going to start seeing a little bit more volatility, but maybe the market will start to move back up. A lot of things still in play, so we've got to watch that closely. This is one of the biggest markets with volatility going forward.